Hey everyone, Andy Cruz here in business development, and
This is William, branch manager for Mortgage Heroes.
so today we're going to have a brief chat because, we've both been in this industry since 2005 and there's a lot changing right now, and we're getting a lot of phone calls. I'm getting direct messages. I'm getting text messages. Hey, what's going on? What do you think is happening? Why is it happening? Where are things going? So we're going to take a minute and talk about some of those things today. So the first question I'm going to ask you is, what is something that over the last couple days or weeks someone's asked you regarding the market, saying like what's going on and why? What are they asking you about?
Well, they're actually asking what is happening because we're seeing changes, Andy, so rapidly. With the interest rate market, the way it's going, with inflation, they're just wondering like, what am I going to be able to buy? Can I still afford this? Should I still buy? So there's more things happening than we think. And there's more questions.
Yeah, I kind of was expecting some questions.
Yeah.
Like the amount of questions I've got though are deep, because some people are just like the surface level, like, hey, what should I do? Other people are like, hey, well, what's causing that, and what do you think that's the result of this and that? So when you're talking to people that are looking to buy and they're trying to figure out what to do, let's play both sides of the coin. So for the people who are maybe on the fence, they're saying, I'm not sure. How are you advising them right now?
Yeah, I'm advising them. We take a look at their whole financial situation, once again, and take a look at what their payments are going to be, and just look and see if this is going to be something that they should still pursue.
Okay.
And
then the people that are still like, they're driving and they're like, hey, I'm going to get in no matter what. Like, what are you advising them right now?
Well, get in your house, right? If they're not, rents are going up. So the rent is still pretty much close enough to purchasing, having a mortgage payment. So we already know that. So we take a look at the options there. And if the buying options outweigh the rental, we're still going to point them in the right direction.
Yeah. So that's a great point, because I think, you need to have a roof over your head one way or another. So if you're driven right now and you want to buy a house in 2022, you honestly still need to take a look. It might just look different today than it did maybe 30, 60 or 90 days ago.
Exactly. And the great thing about everything, the way we're encouraging them is you get in your home, we're having a temporary bandaid, right? You get the home that you're actually looking. Don't lose out on that opportunity. Yes, the interest rate's going to be much higher. Your payment's going to go up maybe $150, $200 more. But we all know history always repeats itself, Andy.
Yeah.
And so those are the things that we're encouraging based on our 16 years experience, encouraging our aspiring homeowners that, hey, we could go ahead and take a look, revisit the situation in another 14, 18, maybe even 20 months from now.
Yeah.
So, and that's the time that we could take advantage of that refinance.
Yeah. So I just talked about that in a recent Monday Mortgage Minute, where, families who are maybe looking for that neighborhood where the elementary, junior high, and high school are, where that's desirable neighborhood. Yeah. That's still a long-term view. Yeah. And I think something that's changed from, back from 2005 when we started to now is our breadth and understanding of the market has certainly changed a lot. And a lot of that came out of the trial of 2008, 2009, 10,
Absolutely.
and all that.
Yes.
So I think for some people, what I'm trying to help give frame of reference for is, what if you're dead set on getting a house, okay, go get the house now. And then like you're saying, come back in 24, 36 months and we'll sort out, okay, what's it look like? Yeah. Because here's what I do know, on the detailed level of conversations people are asking, the Fed can't do what they're doing now forever.
So, can't.
So, banks are in the business of making money. They make money by lending it out.
Correct.
So if you have a complete cramp down of lending, then those banks aren't making money. That has to ease up again bring more money throughout the market. So I think that on the long horizon, rates will certainly come back, but it's not going to be for a little bit.
Yeah, and it has to. Again, history always repeats itself. Yeah. And so I still encourage people to want to buy. Yeah. We're a huge military town, so your BAH is also going to increase with the cost of living.
Yes.
So that's going to go up. And why go in there and rent? Most people that do have the tendency of renting statistically prove that they'll stay in a rental for 5 to 7 years.
Right.
So there's no building of equity. There's no building of any source or any ownership.
Well, and right now,
and the tax write-offs, right? So
there's that. And right now we're in PCS season, which is people coming into San Diego, leaving San Diego. So there's going to be some of that where there's going to be properties changing hands. Yeah. One of the things that kind of like a last thought to kind of conclude today's chat was, I want to make sure that we kind of address the invisible elephant in the room, which is back when the mortgage market collapsed in 2008 and 9. I know that we both saw this, where a lot of people came to us when it was too late. and they said, what do I do?
What do you do? Yeah.
So now knowing what we know about how the market works
Yeah.
And what led to that back then and what the current pressures are now, what would you say to somebody who is maybe having a little bit of difficulty with their house payment or they're not sure what to do with their finances? What would you advise them to do today, knowing what you know from back then?
Oh my God, just take a look at the financial situation. Let's take advantage. The rates are high, but they're not extraordinary high. You know, your credit card debt are much higher. So what we're actually looking into right now is people who have credit cards that are in the 18, 20% that are just tapping into making minimum payments. Obviously, their mortgage is really low. We have a client, 2.875s.
Yeah.
But if you consolidate everything, you can still put everything at a 5.5%, 6%. Having a tax write-off, making all that debt a tax write-off and just consolidating to one, it makes it a lot easier.
Yeah.
And what we're seeing, Andy, is a lot of people extended. Yeah, they have a low interest rate on my house. So that opens up $600-$700 in freed up payments from before. So what they do is, let me go buy that other car.
Right.
Or let me go get more credit card
Take
debt.
on a new payment. Yeah.
You see what I'm saying?
Yeah.
So what we do is, let's take a look at and analyze that. Thank goodness you have equity.
Yes.
How do we put that to work?
And so I think that's one of the things that I know as a stark difference comparatively now than back then is, back then everyone was leveraged to the hilt. It was 100% financing, 125% financing, negative amortization loans, interest only payments. So there was a lot more threat to house prices at the time, but we're at like all-time house prices, all-time high house prices, equities through the roof. So I think owners have two distinct things working for them. Number one is you have a ton of equity in your house right now. Yeah. So if it goes unused, it goes unused. So if there's a time to, like use your words, bandaid your solution for the next 24, 36 months, let's talk about it right now. Don't be ashamed to raise your hand and say, hey, I might need help. The other thing is,
and it doesn't cost you a penny to ask.
Yeah, that's right. Making the phone call doesn't cost you a penny.
Yeah.
The other thing is that, if you truly are in a bind where maybe you feel a little bit embarrassed about your situation, we're not embarrassed about your situation.
Absolutely not. We've been there, Andy.
The level of conversations that we have with people when it comes to their finances, their house, and where they're living is a lot of times really in depth. And so please don't hesitate to come and ask us questions. Say, hey, I might need help with this, because the other alternative is if push comes to shove and there really isn't an out, but you do have a lot of equity, there's still going to be sellers that are going to sell and buyers that need to buy for the aforementioned reasons we already talked about. So the market still continues despite the circumstances being, let's say, less than favorable.
That's absolutely right. We still are facing a crisis in our shortages in homes. Yeah. So there's still plenty of active buyers out there. Yeah. And so again, the encouragement is leverage. Life is all about leverage. So let's use that. Yeah. If your home has that equity, you have leverage. Yeah. There's solutions that can be created based on your current financial situation. Yeah. So do explore those options. Again, it doesn't cost you a penny.
And also at this point, 16 years in and having done thousands of loans, there's a lot of scenarios we've seen where maybe you don't think there's a solution, but we may have already covered that territory 5, 10, 15, 20 times. So absolutely. Again, we don't know what the situation is until you tell us. So tell us a situation. It might be something we're actually really familiar with and have a solution for.
Yeah. And the great thing is, we have plenty of resources to tap into.
That's right.
And we'll make sure that we deploy all our resources to you and figure that out.
Yeah. Well, that's all I wanted to talk to you about today. Thank you guys for watching this video.
Yes, absolutely.
We're going to continue doing this, especially right now when the market is under some uncertain times. There's a lot of changes happening at very high levels federally with the Fed, our monetary policy. We have inflation going on, rates happening. There's a lot of moving parts. So we want to make sure we can digest it all. Yeah. Talk with you guys, receive your questions, then answer them thoroughly. So thank you for watching. Anything last you want to say?
Yeah, no, thank you for watching. And, I appreciate that. And let's just make sure, again, we take advantage of the opportunities that are going to be presented here soon. Yeah. And that are actually still out there right now. Yeah. So
good.
Absolutely. Andy, thank you for your time.
Yeah, thank you as well. See you guys next time.
Bye.